Good afternoon, Carmine. How are you?
Good afternoon. Fine, thanks. Thank you very much for the invitation.
Not at all. Thank you for joining us again. I know you've been a loyal supporter of this conference for a few years now, Carmine, and it's always interesting because you bring not just the securities markets perspective, but also how it links to corporates, how it links to capital raising. So ultimately, what we sometimes forget is the ultimate underlying economic reason for securities markets. And I think I would like to start with a similar conversation with you today, but focus on the digital dimension appropriate for this conference. And that is to see to some extent what role you see for the introduction of more innovation, more technology when it comes to capital raising.
Thank you, Nick, for the question. I think that, in general, I would say FinTech can contribute a lot to capital raising. Simplification, reduction of costs, certainty, market confidence, on all sides, so on issuers, market participants, investors, regulators, and supervisors. Now, okay, we are in this framework, and then we have the framework of, obviously, the tragedy of COVID-19. So I would say that how FinTech can cope with all of this. We had already big, changes in, I would say, in the economy, obviously, in the structure of our systems, industrial systems, digitalization of production and trade systems, and I would say of the entire society. And then, and especially pushed by Europe, a transition towards a more sustainable dimension with, I would say, with respect to manufacturing, distribution, cycle, agile working. So, I would say, deglobalization and disruption. Then, what of all production chains? What can we take, apart from many other issues from the crisis? I would say a positive thing, which is the unprecedented, positive acceleration in the fiscal and financial convergence in the EU, Eurobonds in a sense, and so on. And the negative side, and so we come to where technology can help, is that, we will have this, I would say, huge equity gap, so the positive side was to provide liquidity to both, public and private sector, but it was liquidity debt. Now we have this huge equity gap. We have a lot of studies estimating this, and we have, to fill it, and to fill it with markets which had, I would say, structural issues already there. So, drastic, reduction of listed companies. We had some, but basically all on MTF. So how, technology and the digital revolution can, in a sense, what can they do to overcome the problem? I think that FinTech and all digital finance revolution can directly or indirectly contribute to support firms' recapitalization, and I would say more in general, the refinancing of business. Now, we have, I think we have to distinguish, the effect, I would say, on small, micro enterprises, startups, and then I would say the medium, large one. So we had in place already phenomena where then I would say FinTech has impacted, let's say, crowdfunding. Here, in a sense, the technological dimension is not so, strong. We are basically talking about, an innovative use of internet. So it's not surprised that this field is already in place and well developed. But what makes it, I would say, worthy of interest is that the awareness that crowdfunding is a sort of modern interpretation of the concept of capital market. So digital platform enable, supply and demand. So direct channeling of funds, connecting entities in financial surplus to those in deficits. So in a sense, it's a disintermediation of banking system and markets. Then we may talk about GameStop, but maybe maybe later. And so an equity crowdfunding has the potential to disrupt, in particular, the funding escalator, the beginning, the initial side. But we have lending, crowdfunding, and so on. But then I think that DLT and tokenization is the real breakthrough that FinTech can bring to business financing and capital market. And this concerns all the DLT applications. I think you have already in part discussed, and you will also discuss later. And DLT has the potential to transform, I would say, financial markets as a whole, not only single elements in it. And we have been discussed a lot, tokenization, and so actually allowing, again, more participation, maybe in markets, investing in, let's say, less liquid assets and so on. So if you put these with, I would say, the use of instruments like artificial intelligence and machine learning to, I would say, the framework, like, you know, financial advisory services and asset management, then you may see how this can impact. Then you move, I would say, to the traditional market we have been, you know, observing, including in your conference, but I would say overall, the traditional side. Now, I mean, I think here the impact of technology can be important, I would say, on the traditional listing side. So both on primary markets, so placing securities via blockchain, maybe having a new role for all the plumbing, the post-trading side, CSDs and so on, but also on secondary market. So, I mean, and again, easier access directly of retail investors through, you know, apps, platforms, reduction of cost. Would it be real or not, or a costless platform we may discuss again, traceability of trades, but also maybe sometimes this is underestimated on, I would say, all the corporate governance side of companies. And if there is a simplification and a reduction of cost, then other things being equal, as economists say, this may lead to an incentive to go on the market. So let's say management of corporate actions, access and working efficacy on of AGMs, transparency and effectiveness in the ownership structures, going much easily on beneficial owners, and this is also important in terms of money laundering issues. Access to corporate information. This is actually one of the most important, a very important issue in the CMU action plan, actually is action 1. The idea, given that you have a lot of economies of scale and scope in information, then, and we can see, as many of you, I think, know, the Commission started a consultation a couple of weeks ago. So this is measure on the 1. I mean, it's important that if we want more financing to, especially, you know, to companies, SMEs, or incentive to get listed in order, again, to have, you know, more investors, especially cross-border, cross-EU in any case, you need to have access to information. Possibly access must be, you know, it's easier to have access, especially in a cross-border dimension, through, not necessarily in, but through a single point of access. But information through in a single point of access is, you know, useful and important, so necessary condition, but not sufficient. It's useful only if it is comparable. If it, in order to be, for an information to be comparable, again, you know, FinTech can be helpful on this. You need standardization, okay? Because if they're not comparable, it's not really used. And we may discuss, okay, on corporate information, on financial information, use of IFRS or not, and so on. The second is digitalization. If, you know, massive amount, you know, of data, this is required to, requires to produce and process data in a, you know, in a digital, workable and storable way. So important this. The third is data quality, and this is an issue we have also as supervisor, but as market participants. If the quality is poor, then, you know, the possibility of use data for monitoring and enforcing, but and actually for to comply is reduced. I mean, garbage in, garbage out. You cannot build, you know, good data from nothing, which is from anything bad. The fourth is simplification. So streamlining the flows of data by market participants and NCAs is, and all, you know, I would say users of data is a precondition that is very important for our role, and this conference is FinTech and regulation, but for market participants as well. Another issue is, I think, data protection, which again is something you have been discussing, which is essential to avoid increasingly frequent, you know, cyber attacks on participants, but also on authorities. But last but not least, then there is, I mean, I think a rigorous, proportionality assessment before, building new systems. So I think this is very important. And if we can achieve it through the instruments we're discussing here, I think these would be, of a great help for, a CMU success, but in general for the recovery that we are looking forward to.
Thank you, Carmine. You indeed are picking up on a number of themes we've discussed. Yesterday, we had a discussion on European data spaces. And so the question of a single, we called it a single entry point, a gateway, rather than a mother of all databases. I think you're talking to the same point. Maybe 2 or 3 follow-up questions. One is, you mentioned the importance of DLT. And what power do you see for that? Because, in the extreme case, it would disintermediate a lot of the existing post-trade, CSDs, CCPs. And there were pilot projects 5-8 years ago, but they all failed because of the lack of a regulatory framework. Because you suddenly have to put a regulatory framework around nodes and DLT applications. So where do you see that going, given we've just finished a big package on CCPs?
Nick, I think that, okay, it's true that we have finished the package on CCP, but actually we are having and we are discussing also CSDR review, and actually we are making an assessment of where we are. I think it's important before changing any rule to really assess where, we can improve, always evidence-based, so we need analysis. And by the way, let me make a spot. I'm chairing also the post-trading study committee at ESMA. We had just launched, I think yesterday, a new, call for, applicants for the consultative group there, because we need that an interaction between supervisors, both at national and EU level, and market participants to understand where to improve, especially with new packages. Now, I think that, and we're discussing exactly, I would say, this point, trying to see what kind, of simplification you may have, which you may go from placing securities without the use of any, let's say, plumbing issue, but actually, and you have decentralized, use using, DLT but at the same time, market participants and going on the market. I think you need always, certainty and effective, supervision. So I think that there is, some space, in particular for reduction of costs, which, are important, but also for the stability and macro stability of, those entities, which again, given the typical, economies of scale that they have, I think are, important entities to be looked at.
Thank you. And I think you also referred to this issue around corporate data. Now, we've got the single access point maybe coming. The Commission wants to move ahead with that. But I remember long debates around the Shareholder Rights Directive and what is published and where it's published and how it's published. And it's not working particularly well in the cross-border context. Corporate actions are not easily implemented at the moment because of different law. So if we can deliver this type of technology, which I think we can, we still have the barriers of private law, company law, which is different from member state to member state, not mentioning tax or any of those issues. So how do we harness, as the European Union, the benefits of those technologies in a way that China and US can, particularly China, more easily can, because it's one jurisdiction and a more unified legal system?
That's a moot question, I would say, Nick. More and more we see that the trade-off of being, of a national and supranational, I would say, regulation, which is typical of financial markets, is, I would say, in contrast, we know with company law, which is typical, of member states. And I would say, let me say, more and more of the justice ministers. It's true that this federal dimension, which is in the EU for financial market regulation, and in the US, so SEC and so federal laws, while company law also there is typically national, is an element of competition. I think we need to be brave here. and the member states have to be brave. I mean, we cannot have, I've always said this, and I was happy that the CMU, the forum discussed this. We cannot discuss of shareholders' rights directive 1 and 2 without having a EU definition of shareholder. What are we talking about? I mean, we discuss and regulate everything but the focal point. Now, it's true that this is a complicated issue, okay? But it's true that if we, I mean, a necessary condition to have cross-border funds, and by the way, also funds for the recovery, we will need funds from outside the EU, and not only our friends of UK friends just gone out, but also from other markets. So we need, more harmonization, more certainty, because other things, again, being equal, I mean, if you would become a shareholder, you provide funds to a company, both in turn with bonds, but also with equity, then you want to exercise your rights. And so you need to be a shareholder. This must be easy both ways, to be, identified and recognized, but it must be easy for you to attend an AGM, to exercise your rights, to be recognized. This is still very, very difficult, even within the EU. And okay, let's not discuss of taxation as such, but for example, the topic of withholding tax is a big issue for, favoring, cross-border, funding. So this is, again, we need, I think, member states to be braver on this, honestly, and NCAs also for what they can do.
Following on that theme, Carmine, so in a way you've kind of talked a little bit how CMU becomes a precondition for the delivery of technology, but I think it would be also more interesting to look at the role that technology can play in contributing to the single market. You mentioned it in the way of corporate access to corporate data, but if you look at the trading space, for example, ultimately we're caught in a fragmented market still, and we're competing with more integrated markets, and then markets ultimately liquidity is the driving force. So how should we organize or harness the different technologies we have, or use them to help us and contribute to CMU? I think personally that was one thing I felt was missing from the Commission's report and the expert group, was that we looked very much at regulation, but we didn't really look at how technology can contribute to integrating the market.
Nick, this is also, a big issue. If we want really CMU, okay, we need, as much as possible to have more, integrated markets. We know the Capital Markets Union is with the S, so we're not talking about a single, stock exchange, but we need actually to have a truly, effective CMU where you have the strength of, I would say, all countries is coming, from SMEs, and the new strength for the recovery is coming from startups. So you need, I would say, a top-down and bottom-up approach, including a strengthening of local markets, and proximity is an issue of all the local ecosystems. But then you need, I would say, a top-down, some more integration. Now, where technology can play a role. We may think that EU 27 is a market of 27 stock exchanges. Now, some of you may have seen also ESMA published recently this a new also actually the statistical report on markets. We have in the EU 27 430 regulated markets, MTF and OTF, 200 and more than 200 systematic internalizers. So we have 600 trading some platforms and way to go on. Now this is an issue. How, and obviously on these platforms you have in many cases the same securities. So this is an issue. Actually, liquidity, and you mentioned this, is fragmented. Okay, we know this. This is also positive because there is an aspect of competition among trading platforms, of reduction of costs, maybe or maybe not also of price formation. Basically, we're having today that 1/4 of the on shares, 1/4 is made of the liquidity is on regulated market, 1/4 on MTFs, 1/4 on SIs, systematic internalizers, and 1/4 is OTC. Okay. On bond, as we know, is a different market. Only 1% of the liquidity is on regulated market. And by the way, okay, we may have regulation should maybe need some fixing, but or clarification on data, but we have that only 7% of equities are classified as liquid, and only 0.3% of bonds are classified as liquid. So we have an important competition / fragmentation of trading on the EU. We also know that still, price discovery, we know from when we have unfortunate cases of malfunctioning, let's say, of market infrastructures, not only trading, but in some cases also post-trading. But we see that basically price discovery is still on the regulated market. I think that technology here can help in entering, the debate we are having since, also with you and many others since many years. It's always the same. We call it consolidated limit order book. Let's call it merger of exchanges. But some sort of, obviously, technology can really help to have a newly, informed debate at a much reduced cost on some sort of consolidation. We know that this is on the table. We may discuss of pre or post-trade, and we may discuss of equity and bonds. So it's a sort of 2x2 table. I think that, again, after a strong, cost-benefit analysis, we have different reports already provided also to the Commission, different opinions on the market. But I think we need to explore this way to give, again, more certainty on the market, but also more, I would say, certainty with for market participants, and this is our work also for, investors, final and investors. Would they invest directly or indirectly on the market? And so actually the consolidation needs to go, I think, together also with MiFID II, rethinking in some cases with the old topics of best execution. What are we talking when we talk about prices? And where a trade is executed. But honestly, I think, Nick, that really on this, technology can, technology and being brave can help us in having more, trustable markets, again, in order to attract the liquidity we need.
So if I understand you correctly, yes, we have our long-standing discussions about consolidated tapes and what they are and what they're not, and half the market loves them and half the market doesn't. Let's leave it at that, or have different views on what it means. But if I capture what you're saying correctly, and please tell me so, Carmine, but that's the case, is it doesn't really matter how many venues we have or what the structure is or whether every country needs to have its stock exchange. It's really about how we bring the data together around transaction data and how basically really consolidation of data flows within the single market could create a CMU. Is that a fair kind of summary?
Yeah, I utterly agree with you. I always have had these ideas. I think, first of all, we see from the business, the traditional, we know that in the past, we thought that exchanges were producing, listing and trading services. We see from what they are today. Exchanges are, so the typical exchange, but then we have all, the managers of platform, would it be intermediaries or market operators as such. The revenues comes from data, we know. So these are big, financial information groups. And so I would say that it is not relevant. So I confirm also what you're saying and the summary. So I think it's not the topic of the number of trading platforms, okay? And also the business organization of exchanges. We have exchanges already, I would say, in a sense, merged among them, or other exchanges with different, kind of operations and agreement, maybe providing technology to others, having easier cross listings and cross remote membership. I think the topic is, the consolidation of information. Now, on this, okay, we are here discussing, again, these issues we've been discussing. Okay, Commission, the bet 20 years ago after ISD and MiFID I was to have someone would emerge from the market. but apparently this not happen. So I think that maybe in some cases this is the typical, market failure issue, so that should be tackled.
Thank you. Maybe I come to one question, and you opened up with this as well when you mentioned GameStop. I think another initiative within CMU is the increasing the participation of the retail investor. And I always kind of remember when we go back to the original Financial Service Action Plan, which wanted to create a deep and liquid market. And I always made the joke that this could lead to a liquid pool in which the retail investor drowns because there's too much liquidity and information. But retail investment and retail investor participation is becoming more important again. But GameStop shows that in an increasingly platform-orientated marketplace, we can also see potentially irrational behavior. We see it also at the moment with the price of crypto assets jumping. How do we harness new technologies to bring retail investors into this process, but do it in a way that protects consumers, ensures they have the right and fair, transparent information, and that they don't potentially become subject to market manipulation or insider information, which might or might not be the case here. So how do we find the right balance here? Because we require a huge amount of additional knowledge, expertise, and wisdom in our retail investors.
This is an important issue, and I would say the recent events, I think, make us, so reconsider, our ideas. I would say I'm firmly convinced that we need retail investor participation to financial markets, directly or indirectly, but also directly. Okay, and so I think that it is important to have easier access and at reduced cost. Okay, so this is, I think, an important issue. Then the access should be, first of all, and maybe through, given that you are not direct market participants, okay, in, let's say, correct way, both in terms of, let's say, diversification of your portfolio, of trying, to have a proportionate, I would say, knowledge of what you are buying in. And that's why I think that the easier is the access, then another issue of the action plan is investor education, top down and bottom up. And so this is important. At the same, on the other side, and so that we have to find the right balance. I think the evolution of these kind of platforms are interesting. They make it easier to share informations and opinions, even before trading, okay. But then, okay, there are, I think, issues that must be, carefully considered, okay. Is not only, you were saying they may be the object of market manipulation, but they actually may be the players of market manipulation. I think this is, not the case. European issues are, I think, different. Especially different also on the other side of the US game we have seen with all the short selling issues. Okay. But I think that we need to be careful of not having a disproportionate reaction, which could be also typical of maybe of some jurisdiction, in order to avoid problems, to stop the access of retail investors to the market. Because I think, the safest markets for supervisors, not for retail investors, is the empty market. But this is not, I think, efficient in terms of growth, of financing, especially, again, of SMEs. So we must be careful. And I think that now the MiFID II, all the proposals around there can be useful in calibrating more the kind of, test and I would say obstacles and easiness to access the market by at least some, categories of retail investors.
Thank you very much, Carmine. We're coming to the end of the half hour and it flew very, very fast. I think next time we have to plan for more time. But I think you make good points that technology facilitates access, facilitates flow of information, facilitates reductions of costs, but it does come with some risks because it increases speed. And yes, there's no return without risk, but that needs to be calibrated in a fair way for all participants, and not just for those that have easier access to information. We'll see what happens with the consolidated tape, and I know you'll be actively involved in this. I found this very stimulating, and it's a nice way to start the afternoon. As always, hopefully we'll see you in person again next time. We talked about that, Carmine, because you actually joined us last year also virtually, so you kind of, I'm afraid, preempted slightly this year, because in Italy you were already hitting COVID a year ago. Thank you very much for being with us, as always, and see you soon and speak to you soon.
Thank you very much, and have a nice afternoon.